Welcome, ladies and gentlemen, to the Daily High with your host, Matt McGregor and Tone Vase. Good morning, mate. How are you?
Morning. Good, good. I am currently in Miami. Had to come here for a little bit and be here a few days, and then we'll see.
Awesome. Awesome. Well, Bitcoin looks very interesting. Are you still in that trade?
No, no, I pulled out. I followed my own rules for a change. It was not at 62 when Friday was ending. I got out. I didn't get out 100%. I got out like 60 or 75, just in case I'm wrong. I didn't even label my chart. I'll probably get back in today. I'm liking the consolidation so far, but we have a lot to talk about. Matt, why don't you go first?
All right, mate. Well, sure will. Bangbox is currently in a trade, so I'm really excited that we can do a show when Bangbox is in the trade. So, oh, give me screen share. That's the first
Ah,
time you've done that in 6 months.
yeah, forgot about that. You good?
All right, here we go. Um, all right. All right, you can see my screen as it is. Nice.
Mm-hmm.
All right, cool. Well, all right, let's start with the weekly. It's the first day of the week. So, of course, there's a data glitch right here, but just pretend this is green candle from here. That's just looks better. We have had the bearish cross on alpha numerics here on the weekly time frame. So, not good, obviously, but this does tend to be lagging on the weekly time frame. I don't trade off it on the weekly time frame just because we got a 7 period moving average crossing a 30. A lot of the times that can happen kind of near towards the bottom of the market. Here's an example of that right here, where we had that bearish cross, and yeah, it went down a little bit, but then it had a good rally after. But it can also, I'm just going to put auto on for a second. It can also be this, where we have that bearish cross and it stays bearish for an infinite amount of time. Okay, so it's not tradable but it is noteworthy. We don't want it. All right, we want to be on this side of the trade crossing upwards, and we get this. That's what it wants to be. Looking at it from a just a pure interest point of view, it doesn't change much for what the charts look like right now. I don't think so. I've still absolutely love that we came up and had a fantastic response here off the crash that we had. We're back inside the consolidated range. I'm fine with it. I'm totally fine with it. I don't want to see us go, below 57 again and make its way back down lower. Then yeah, absolutely lower targets are on the table if that's the case. But you'll hate me saying it. I see any buy in this area, below 50 is a very, very good opportunity for the rest of the year. Just the way I was bullish back here. I'm still completely in that trade. I didn't do anything from 52, 200. Still in that trade, still satisfied with it. Yeah, we pulled back a little bit. Don't mind. Don't mind that at all. I'll just quickly look at some of the oscillators. Yeah, look, I mean, you can look at the RSI. It's not fantastic, obviously, below the 50 mark, coming back to retest it here. It's nothing. There's no good read on that. The copy curve is still to the negative side. I was really hoping we would get that a really, really short-lived, time below the mark and just recover quickly. Still could happen. It could be one of these. I just don't want it to be one of these. All right.
That's
So
rare, man. That's really rare.
which
Well,
one?
what the
This one?
Copic, what the no, what the Copic did is very rare.
In what sense? What do you like?
Like it fully turned and then dropped on a dime
Mm.
again. It's very
Oh
rare.
yeah. Yeah. It is. It's normally a lot more rounded, as you can see. They're quite
Yeah,
smooth and rounded. That
yeah,
that
yeah.
was
It's it's, it's very rare. Yeah.
that's a sharp kink, no doubt about it. No doubt about it. But I mean, we have conceded down again now. I still think there's a chance that we can put in one of these. I really do. I don't think that we're going into one of these, which is months on end of being below the zero line. But only time will tell at this point. And that's the weekly as it stands right now. I'm quietly confident, but I do need to see us get above these moving averages here. And it's a funny thing. Like if we did really this week, with a full week to go in the tank, we could actually belt up right here and get
Those.
push up, and this cross would never have happened. Actually, that's the irony of it. This is not a confirmed crossing yet at all. So we'll see what happens there. Daily time frame, same jazz. This is I don't mind this at all, to be honest. That we came down, put the low in on the green diamond, came back up. If this is the low that we put in, this is really really terrific as a fantastic W pattern here for a breakout. It's a possibility that this happens, but it just once again we need to see. I think that if we can get back up to these marks that we got stopped up at the 30, this is a cluster here to the 200 simple moving average, the 50 simple moving average, the 30 simple moving average is the red, but we got stopped at exactly the 200, and I'll get in even closer to it so you can see it. I mean, look how brilliant this was. I mean, it really, really got stuck on all of these marks, and even coming up perfectly and touching yesterday on the 50 here. I want to see us clear this zone. Once we clear this zone, I think there's a real possibility for further upside. I think that there's a really, really good chance of that. But as it stands, once again, this could fade. And like the MRI count here, putting in the 9 and putting in the bottom, and then getting like a 1, 2, 4 candle print here, and starting with a red one. I can, Tone, I'd love to hear your thoughts on that when you get into it. The MRI on the daily looks like a bit negative. So, we'll see how that plays out. I'll scoot down to the 4-hour time frame now, give you my thoughts. I like the last 4 hours that we had on the close here, which it's really good for me that we pushed into this close, because that was like the 12-hour candle, the new 12-hour midday candle. I really like when we close strong on that. So if this candle starts getting above here again, we'll put in that green star on the 4-hour. Don't mind the momentum to get back up. I like it. I like this structure a lot. So we'll see how it goes. So this is a simple trade right here as it stands, because we've got a real well-defined stop loss down here below the 50 simple moving average. You might want to wait to get in if it comes back down to this range here, but the closer you can get to this point right here, the better this trade is for the upside. That is, I don't mind that at all. And otherwise, if we just start to get above and put in the green star on the MRI, that's your good trade there as well. So we'll see how that goes. Just to finish this off for my analysis for the start of the week, we'll have a look at the bang box trade as it stands right now. So we got into the trade about 30 minutes ago as bang box comes on. All right, so we're at break even right now. Ugh. So we got into the trade right here as this candle opened. It looked really good off the bat. We had this initial stop loss in place down here at 59. Because that had such a good candle, now the stop loss has been raised to here to 59,400, and we're at just below break even right now. I really hope this can kick on and we can avoid getting stopped out here at a loss in this trade, but time will tell. We've got safety measures in place. If this does come down and crack through this, I do think that there's a chance that we correct further in the day. So this could stop out live on air right now, which I don't want it to happen. I really like that candle, that recovery we had. And when we got back up here, I thought that looked really positive. But now it's turned a bit negative again. So we'll just have to wait and see. So everybody got into the trade. So we've got about 200 in the trade right now. So we'll see how this plays out. We'll come back to this at the end of the show and see how it's looking. But that's all I've got. Tone, as I come back to you, please like and subscribe. Please share it with your friends. Use the affiliate links in the description below. Join the Discord group. We just got to this special level on Discord where we're now like validated or premium or something. So we show up on if you're in a Discord person, we're now in a different tier, and we're ranked, I think, the highest community in the world on Discord for trading bots at the moment. So that's really, really exciting. Yeah, it's quite good. We had a heap of people join today because we're not invisible anymore. You don't have to know the name to search it. You can just search it. It comes up if you just type in trading bots on Discord, apparently. So I don't use Discord that much, but that's a really good thing. So get on board, guys. Join the team. All right, Tone, how are we looking?
All right, I need to start working on the MRI bot, is what you're telling me.
Yeah, hurry up. I'm waiting.
All right, I don't like this. So my weekly chart actually updated, and it's a proper green candle. Here's the good news, and there's very little good news. The good news is that we have a beautiful reversal candle on last week's candle, even though I don't like the upper wick at all. So I would have rather see this candle close closer to 62,000, and then I would have been very, very bullish. The current candle so far, the week has just started, still has, obviously 6.5 days to go out of 7. But if you look at the oscillators, they are all in terrible shape. The RSI is below everything at a double bottom. It needs to reset below I have it at 35. I have it at 35 for a reset, not a traditional 30. The CMF looks terrible. It is dropping like a stone, saying that under the hood, things are looking very, very bad. The MACD is like as bad as it can possibly look at this stage. After the cross, still got plenty of ways to go to zero and not even close to reversing. The This is the Socrates. I'm not really too familiar with this. I put it on there because you're talking about it. Let me stay away from that. But to me, this doesn't look good. As a chartist, whatever this thing predicts, it doesn't look good to me. Like I don't even need to know what it is. I can just say this looks bad without
Yeah, that's
knowing what this is
fair.
at all.
Fair.
And the volume on last week's candle was decent, but if there isn't a follow through this week, it doesn't matter. So we're still in this downward channel. We hit the 50 period moving average here on the weekly, but we're way above it, and there's nothing stopping us from hitting it again. We're still way too close to the prior swing low on the close, and the intra-week swing low looks like it's safe, but what does that really mean, right? Like we can still go down and consolidate without breaking the $49,000 low for like the next 4 months. Okay, so it doesn't. This is just like the weekly is not good. The allocation chart, like this is terrible looking. I had to pull my trade. We did not close above 62. I got out at the end of trading day around 61. And right now, I am not bullish at all. I was gonna say when the show just started, because I haven't really looked at the price. I was traveling all day yesterday, and I was gonna say, hey, if we go up a little bit, I can get back in at the same exact price I got out. I'm looking at this chart. No, I'm not. I'm gonna wait until we're sufficiently above 64,500. Like this thing is just a major whipsaw. Mark Wood was right. I got back in a bit prematurely. I got in because we broke all the moving averages, but the long-term moving average was never trending up at any point. Maybe up here it was when we were at 70 it was, but by the time this 4-day candle closed, the long-term moving average was still declining. And now it's continuing to decline, and this looks terrible. I'm going to wait until we're above the moving averages again. And while before I looked at the chart 5 minutes ago, I was going to say I'll get back in any second, and now I'm ready to say I'm probably going to pull the 40% any second at this point. If we go any lower, I mean, if we don't close above 60 today, I'm probably going to just go back to cash. And the way I plan to make up for this whipsaw and losing some money on my account is to go leverage long when we finally break out, because eventually a breakout is coming, and we all know it. We all know what's coming. One of these monster moves up, and I would rather make up for what's been happening the last 4 months with 20-30% of my account in the futures market for a few months, just catching this wave, right? If we put a measured move on some of these, right? Like right here on the green, we go up 40% in less than about a month, right? If I do it for the purple, couple of months right here, we go up 60%. Okay, Well, we're not going to touch the blue because that was too long ago. So we're just going to stick to the purple and the green, the last two moves up. Purple was the last wave up. Green was the cycle before that. Okay. So we all know what's coming, but when is it coming? Nobody knows. The daily chart looks bad. We could not break above these two moving averages. This was like the best case scenario where we break above both of them and then just consolidate while the moving averages are declining and then break above the final one. But now everything is declining. We could not break them. We got a proper rejection. We got a straight up negative count. And because this is a clear 4-day drop here in a borderline consolidation, the next candle gives me a red star candle, and I'm taking it very seriously. Now, in hindsight, this is clearly a 1 to 4 candle correction move to the upside as a dead cat bounce. We always suspected this could be a dead cat bounce, but this massive, strong candle on strong volume, well, no, I take that back, wasn't even that strong of a volume. This strong candle gave the illusion that, hey, we may be out of the woods, we may break this quadruple cluster of resistance with 4 moving averages and an MRI resistance line, but it couldn't even break the first one, and that's very weak. And now the red star candle, which would come in below today's low, which currently sits at 57.6, and if we go below that, that's bad. Okay, so everything here points to a total
That's
disaster. Now,
that's sorry, Toe, just to jump in, man. I hate jumping in on you, but like
yeah, go
looking
ahead.
at that, and I saw it too, that the crash down that we got, that bounce that we had to where it stopped to where it's retracing right now with the MRI count is textbook dead cat bounce. Um, the only saving grace for me in that is that if it recovers from here and clears those moving averages, it'll look like a perfect sort of W pattern bottom. So it does look, you know, a cautious trader would, you know, err on the side of a dead cat bounce at this point until, exactly as Tone said, we start to clear those moving averages. Um, it makes total sense to me. It makes total sense to me too. I agree.
Yeah, the MACD is looking like it wants to repeat what it did at the last low and what it did at the prior low. So I I I want to cling to something bullish here, but I can't.
Well,
We
yeah.
did not get anything substantial.
we'll have to just look at the traditional markets and see if there's anything pulling us up more macro. It's not in a vacuum. I think that's
Here's the
the
best thing
only.
I can say. The best thing I can say is we have massive divergence with the CMF.
Mm.
That is my only positive news right now on this chart. That's it. That's really the list. And traditional markets, I had a call with a friend over the weekend who is all over that Japanese carry trade. I had
Yeah.
him watch our video from Friday where I said I wasn't too concerned, and he completely disagrees with me. He apparently has a little bit of, now I'm not going to say it's inside information, but he has connections in the bond space. And he said the Japanese carry trade is only 5% unwound, and it's going to get unwound a lot more than 5%. He believes that the Japanese yen is going to strengthen significantly, even though I'm on the other side of that view. I'm not going to say I'm on the other side of that trade because I don't trade the Japanese yen, but I'm on the other side of that view. And he says the Fed is more likely to raise rates because of the Japanese carry trade than to lower them for the U.S. domestic markets. And the first thing I did this morning was go and take a look at what the expectation is on the Fed, and it's 50-50. And I
Mm.
remember the last time I looked at this, it was like 85, 90% that the Fed was going to lower the rate. Oh, actually, my bad. It still is. Oh, I'm sorry. It's 100% that the Fed is going to lower the rate. My bad. I thought this was 525, 550. Now they're saying there's a 50% chance the Fed will lower it by 50%. And again, I don't get swayed by other people much. I still believe what I believe until the market proves me wrong. I still believe the Fed is going to lower rates. I believe it's going to lower the rate 25%. I don't believe it's going to lower the rate 50%. But according to someone that I know that is actually putting money on it, and not a small sum either, he believes the Fed is more likely to raise the rate because they're scared of what the Japanese are going to do. Because if the Fed lowers the rate with the Japanese raising the rate, it creates more incentive to unwind the carry trade even more. So suddenly the Federal Reserve is a global Federal Reserve Bank that cares about what's happening in Japan as much as it cares about what's happening in the US domestic markets, which is the downside of being the world reserve currency and the world's biggest economy responsible for the world. So we will see. We will see where this goes. You still have a full month to go, so plenty of things can happen. But it's an interesting thing, and that discussion scared me a little bit from the speculative assets. And the problem is that when these institutions are unwinding their carry trade, where they have to pay back the yen that is losing the money, they gotta sell shit to pay that loan back. And what they end up selling is the speculative assets that they have been holding, and Bitcoin happens to be one of them. Now, I don't know, right? I mean, if we are talking about massive money here, Bitcoin is a special asset, right? And in my I would never enter this trade because I would never want to be responsible for other, for that much other people's money. But in my view, Bitcoin is a special breed. And Bitcoin allows you to do one thing that prior assets never did. And this is where I guess the government has a legitimate beef with Bitcoin's existence. Bitcoins allows you to exit scam, where traditional markets, not to the same extent, right? Unless you're John Corzine of FM Global. So what Bitcoin allows you to do, that if you did take on, $1 billion loan through the Japanese carry trade, and you happen to put it into Bitcoin, you can withdraw the Bitcoin and disappear to China like Big Bird, okay? Versus losing $500 million in that trade. So I find it hard to believe that Bitcoin would be like, you would be selling the Bitcoin because you always have the option of exit scamming even out of the traditional market by taking the Bitcoin out of the exchange and not paying back a Japanese carry trade. Okay, so yes, the traditional markets might sell off, but in this case, if you're sitting on 2,000 Bitcoin, you may have other options. I'm just saying, you should take those other options and become an international criminal. But that option is always there. Okay, just pointing that out. So
Not
I think,
financial advice.
yeah, definitely not financial advice or legal advice for that matter. Okay, so the oil market is ticking back up, and this has a lot to do with what's going to happen between Iran and Israel. Iran has not retaliated yet for what Israel did with the assassinations on Iranian soil and Lebanese soil. So we'll see how that goes. And the gold is still near the top. So whatever this unwounding was, I mean, maybe they didn't speculate in gold, which probably makes sense because if you're going to borrow a bunch of money off the Japanese, the yen carry trade, and we keep talking about the Japanese yen carry trade, and people may not know what that means. What that means is you can borrow money in Japan cheaply because their interest rates were super low. They were negative, actually. They were like paying you to borrow money. And on top of that, the money that you're borrowing is the Japanese yen, which is falling in price. So you get a double boost, right? You're borrowing money at zero price. You're buying it in a currency that is devaluing against the US dollar. So imagine what it's doing against the stock market, which is rising against the US dollar, or Bitcoin, which is rising against the US dollar, or pretty much anything that is rising against the US dollar, real estate, whatever else you can come up with. Um, Even US government bonds that are paying you, like 4 or 5%. So a lot of people borrowed money in Japanese yen, and profiting nicely. But what happens when the Japan raises the interest rate, and now your money isn't as cheap, and the Japanese yen immediately spikes in price, so now you got to pay back in more expensive Japanese yen. And suddenly, margin calls are happening, or people are getting scared. What if Japan raises rates again? What if the Japanese yen continues to appreciate, and the market is falling, and suddenly your trade goes completely backwards on you? And this has been happening not last year, not since the pandemic. This has been happening for a decade. Okay, and now a lot of these traders that have been profiting massively need to unwind these trades. So they need to sell their other positions that they purchased with these loans and pay back these loans. And also, if they've been doing it for a decade or two, then these loans are just due. Like eventually you got to pay back the principal of your debt. And so this is what's happening right now. And some people think this is just getting started. Like I said, my friend thinks that only 5% has taken place. And that's what caused the huge crash on Monday, as you guys saw in the Japanese markets. That in the Japanese, so if we say the Japanese took 100% of the problem, the U.S. markets were about 20-25% affected, versus what happened in Japan. Japan falls 20%, US falls, say, 5%. Okay, so it was like a 20-25% effect in the US market. But if this was 5% unwound, and the next time this happens at a 10% clip, right? Now the Japanese markets can move 30%, the US markets can move 10%. Okay, so I'm still of the belief that the worst is actually over, but I got people that think that like nothing has started yet. So we're on completely opposite divides here. Now, if Iran and Israel go to a real war, oil prices, I expect oil prices to spike. I don't see how they cannot. Would I speculate on that trade? I don't know. Maybe I have to think about it some more. Stock market. We're streaming this before market open. There is not much I can say. It's Monday, so that's it for me. Nothing I can say about the stock market. The 5-minute futures market is this? No, it's the daily futures market. It's a green star candle. I mean, it looks good right now, but until market opens on a Monday, there's really nothing we can say. All right. Someone is asking if they shorted at 58.7. Well, if you shorted at 58.7, should be a lot happier right now than, say, an hour ago, right? I don't know. I don't like this at all. Like if we look at the high that was made on Thursday, we could not break it on Friday.
What kind of
On
leverage did
Sunday,
they use?
sorry.
Sorry, what kind of leverage did they use in the position from 58
No,
7?
we're not going to be that detailed, right?
No.
Well, leverage doesn't matter, right? Because if you short at 58 and he didn't get stopped out, I mean, the leverage obviously wasn't 100. I don't want to get too detailed into people's
Yeah.
trades.
Yeah.
I'm just saying that at a minimum, this trend line needs to break. And in order
Right.
for this trend line to break, we got to go above 60 and a half, no matter how you slice it. Maybe even 61. And I mean, I hope Bang Box gives you a positive trade. I hope we break it. Like, I'm not doing anything, but the moment we break below these lows, the moment we break below 58 3, you should be very happy with your short because I'm bailing out my long. So this thing is gonna resolve one way or another right here. this triangle is going to resolve one way or another. And I am not very optimistic. Because we're also dealing with this. It's not good. It's not good. There. We'll see which way this resolves, but it's not looking good. All right. That's it for me. Oh, the ETFs. There was a little bit of buying. It was mostly the Grayscale mini ETF. The numbers here were very weird. This thing was actually selling off the whole time, and then suddenly it has 31,000 Bitcoin. It's weird. Maybe they converted some more. I don't know, but I was watching it every day, and then I expected this to say 24,000, and then suddenly it's saying 31, and I can't account for it. But that's what their website says. So unless they're doing something fishy, but it's a regulated product, so I don't know. But Grayscale is still selling off like a bandit. They're selling off crazy amount of Bitcoin. Fidelity will probably pass them by end of this year. And what do you call them? iShares, BlackRock is still buying. So if we look at the weekly numbers, BlackRock purchased 3,600 Bitcoin last week. You can see how BlackRock is always rising. So here, if you start looking from the beginning of July, you see it constantly rising from 307 to 316, 327, 338, 342, 344, 347. So they're buying multiple thousand Bitcoin every single week.
I think BlackRock will cannibalize all these other ETFs. Maybe,
it's looking like it.
iShares, Fidelity maybe, but yeah.
It's looking like for some crazy reason, Wisdom Tree, which I was ready to just remove because it was just an annoyance to keep track of, and their 1,000 Bitcoin somehow doubled in their Bitcoin holdings. Weird shit's happening right now. And like I said, somehow this Grayscale mini ETF, which I was watching like bleeding Bitcoin all week, suddenly pops to 31,000. I can't account for it. And I saw it on like right here on this website, and I thought they made a mistake. Well, like here, the Grayscale mini ETF, and you see it bought 400 and then 0 and then 100 and then 200. Okay, that's what it did all week long. Even though I thought these numbers were slightly decreasing before. But that still doesn't account. This is the week. This is Monday through Friday. And okay, and then somehow it has 31,000 Bitcoin when last week it had, well, last week it had 24,000. Okay, last I checked, 400 plus 200 plus 200 does not equal 7,000. And so something's weird. And then I went to the website to check the number. And that's the number, 31,000. Where the hell did it come from? So I don't know. There's the number, 31,000. 30,969, but they update late. But you can see they're holding. So I don't know. I don't get it. So something's weird. So something's weird. I don't know. I don't get it.
All right.
All right. Anyway, we're gonna leave it here. That's it for me. How do I get off screen share? There you go. Close us out, Matt.
Thanks. All right. Thanks, guys. Thanks for watching. Happy Monday once again. It's going to be a very interesting week. You said the word whipsaw 3 times, 2 or 3 times in that show, and that's a fair assessment in the market right now. It's in whipsaw, So I don't know which way it's going to go. I can make a case either way. I definitely see your point of view with that dead cat bounce, very classical dead cat bounce, but it could also put in a lower low, and if the ETFs keep rocking away and people get on board, Don't know. I'm still in my trade, so we'll see how it goes. See you tomorrow, same time or an hour later. Tone, we usual time tomorrow, or you can be early again tomorrow?
Don't know yet. Let you know.
Don't know. We'll let you know. Thanks, guys. Thanks for watching.